Okay, so guys, I want to introduce myself first on who I am. My name is Brandon Stringer. I'm a day trader in Forex. I'm a marketer, internet marketer. I've made six figures in both. I've taken advantage of so many different opportunities, and I've made this YouTube channel to show people how to build income residually, how to multiply their income using Forex, and just building skill sets, confidence, and networking and resources. So uh, we're going to be going over what is Forex in this video, how to trade, and a simple strategy that anyone can do where you don't have to pay anything. So let's kind of get into it, guys. First of all, I kind of want to show you some of the cool stuff I got going on. So I own several businesses. One of them is called FX Social. For FX Social, what we offer is mainly we kind of stick to signals. We offer very good signals. And so if you want the signals, you can hit me up later to learn more about how to get those signals. You literally just copy and paste. And what I do is I qualify the trader. And if I believe they're good enough, I'll put them on my platform to also send out signals. So as the company grows, we start getting better and better traders, and we kick out the traders that suck. And eventually, it's going to be the point where we have super profitable trades where you're getting 5 to 10% of your money. And all you're doing is just being a part of a group and just copying what we send out. So it's going to get really crazy. That's going to be really dope. I also have a company called Agency Plug. I'll kind of show that off real quick. And so what Agency Plug is, let me bring it up, is a website building tool. And with this website building tool, you can build your own website. So if you've ever heard of Wix or Squarespace or Shopify or ClickFunnels, you can literally build your own website. But what makes mine different than theirs? One is I don't do a free trial. I don't have 14 days before you got to pay. Mine's completely free to use to build your website. We have tons of different templates, like as you see, already done. And you only pay $25 a month when you decide to publish to the web. So you can build your whole site out and you never publish it, you never pay for anything. But now the reason I did that is because I wanted to give people time to create their stuff. So we're going to offer a lot of different things. I'm also an affiliate marketer where I don't own every product that I share with people, but I refer people to products that I believe or I deem that are worthy of me referring them to because I like the products and I use them for myself. And I actually make money per referral. And I teach people how to do it also. So I do a lot of different things, guys. I have over like 9 or 10 different streams of income that pays me every single day. And it's been a blessing because I made this YouTube channel just to share that with everybody. So let's get into the nitty and the gritty. So for one, let's kind of go over what is Forex. So I'm going to hide this for now. We'll bring this back. Let's bring this down a little bit. What is Forex? Like, what is the foreign exchange market? So basically, guys, the foreign exchange market is very, very simple. When you go out the country, you have to exchange your currency for that country's currency. So when you exchange your currency for that country's currency, you are literally using their currency, but you have to exchange your currency. So what determines what my USD dollar is worth in euros when I go to Europe? Well, that's what the foreign exchange market is, guys. So when you're going out the country, when you're exchanging your currency, what determines your worth of your dollar for their dollar or their currency is the foreign exchange market. Now that we understand that, how we make money, guys, is as day traders, we're making money off the ups and downs of the market. Now, this is where a lot of people mess up when it comes to stocks or Forex. They confuse stocks and Forex together. So sometimes I have to teach people to unlearn stocks and not unlearn it, just understand they're two different markets. They both are kind of the same when it comes to trading, but they're not the same as far as how it works. With stocks, you're purchasing shares. So if I bought 100 shares at $1, and then next year, each share is worth $2. Now each of my shares are worth $2, and I have $200. If I close those shares, I take those shares out, I've made $200. Stock market is like $25 billion a day. The foreign exchange market, guys, is about $6.5 trillion per day as of this video. So it's a bigger market. You don't need nowhere near as much money, and it's more like you're in and out the market. So we're going to go over how that works and how the profit works. And another misconception a lot of people think is that when the market's going down, that's a bad thing. In stocks, we're not talking about options. We're just talking about regular stocks when you're buying shares. Yes, that can be bad. When you can't short and all that good stuff, yes, it can be bad. In the foreign exchange market, there's no negative connotation or positive connotation when it comes to ups and downs in the market because it's a competing market, meaning that I'm not purchasing euros and I'm not purchasing USD. I'm just betting against the market or if it's going to go up or down. So we're going to kind of go over that really quickly, guys. Let me stop my video for a second so we can just focus on that. So as we're looking at the market, guys, as you can see, the market's going up, down and up and down and up. And so when you're taking trades, guys, you can literally make money off the ups and the downs of the market. It just depends on what direction of the market that you choose. So let's kind of give you a very simple example. Let's say that we all have $1,000 right now in our pockets. And I decide that, you know what, guys, let's say that you're in my signal group, hypothetically. And I call a trade out. We all have $1,000. I say, hey, guys, I send out in my signal group. Euro USD is about to be a buy. Take the trade. Now, what buy means in Forex is that means you think the market's about to go up. What sell means in Forex, it means you think the market's about to go down. So you're not buying or selling anything. Just think of it very simple. I like to keep my terms very simple. In layman terms, buy means up, sell means down. When I say it's a bull market, that means that the market is going up. That means a trendy market going up. When I say it's a bear market, that means the market is going down. So it's very simple terminology for up and down. So let's say we took this trade right here, guys. We're gonna look at this trade right here. And I called that signal out. And I said, hey guys, let's take this trade. We all have $1,000. And we took this trade right here. Let's highlight it really quickly. We took that trade right there. When we take this trade and the market starts going up, we took this trade right here. Now, we decided to buy the market. That means that we believe the euro is about to get stronger against the USD from the moment we take that trade. So what does that mean? How do you know which pair is which? Whatever pair is first, you see the zero? Whatever pair is first, when the market goes up, it goes up in that first pair's favor. Whenever the market goes down, that means it goes down in that second pair's favor. So what that means is that if the market is going up, that means since the euro is first, it's going up in the euro's favor. When the market went down, it was going down in the USD's favor. So we believe that, the euro market is about to go up. And we'll talk about different reasons why it went up, but let's just talk about how to profit for now. The market's about to go up. We're super excited. So we all have $1,000 in our account. And I do $5 per pip. And you do $1 per pip. So what is a pip for those who don't know? That's basically how you measure the market. So if I told you the market went up and you have no idea how to measure it, it just went up. So how do you measure how far up and down something goes? Like how tall you are, you use foot, inches, and so on. But in the market, in the Forex market, we use pips. So when I say the market moves 100 pips up, that means that that's how we measure how far it went from here to here, or from here to here, or from here to here, or from down, up and down, down and up. Now, how you make money in the markets is you make money per pip. So when you take the trade, you decide how much money do you want to make per pip. And we're going to go over the strategies, and we're going to teach you how to do risk management to decide how much you should do per pip based off your account size and based off the trade. But that's where a lot of people mess up. For those who already know how to trade, a lot of you guys just don't know the risk to reward ratio of the trade. So you don't know what to put per trade. You don't know what you can potentially lose. So we're going to go over that also today. So let's say we all take this trade for $1,000. And we took the trade right there. And actually took that trade. That's the crazy part, right? So let's say that, you know what? I'm willing. Please mute your mics, guys, for me. I'm willing to risk. I'm willing to say, you know what? I believe the market is going to go up. But I'm willing to say, you know what? Just in case I'm wrong, I'm willing to risk this many pips to gain this many pips. So we're going to go over how many pips that is in a minute. So it's $1,000, guys. We both take the trade. I do $5 per pip. You do $1 per pip. Let's see when we took that trade, how far did it go? It went up about 461 pips. So if you had $1,000 and you did $1 per pip, you made at this trade $461. But I did, so that means your account size went from $1,000 to $1,461. I did $5 per pip. So my account size went from $1,000 to $5 times 461 pips is $2,305. My account size went from $1,000 to $3,300. So, guys, the Forex market can be very profitable. You don't have to aim for 461 pips every time you take a trade. Yes, this was a very good trade, but imagine this. I want you to imagine this. Imagine you only aim for 30 to 50 pips per day. So let's just do 30 pips a day for now. 30 pips a day times, we'll say you trade 5 times a week. That's 150 pips a week. Whatever dollar amount you choose, that's how much money you're making every single week. So if you do $1 times 150, you're making $150 a week. You do $2 times 150, that means you're making $300 a week. You're doing $10 times 150 pips, you're doing $1,500 per week. So that's how you profit in the Forex market, guys. We're going to go over some strategies. We're going to go over basic market structure. We're going to go over why the market moves certain directions and what drives the market. But I want you to understand the profit behind it. And so let's kind of talk about what happened during this trade, right? So if we look at this trade, right, we took the trade right here. The trade went negative. Let's see, right here. If you look at the trade right here, since we did a buy, that means that if the market hit my stop loss, the stop loss and take profit is this. So I'm going to show you what both of them are. Let's say this is my take profit. I'm going to put this as a take profit. Here you go. So look, this is my take profit, right? And this is my stop loss. What is the take profit and stop loss? Let's say that I'm not watching my trades, and I believe the market will go up this far, but I'm not watching it. That means that I can set my take profit, and I can say, you know, I think it's going to hit 1.11224, and if it hits my take profit, I'm going to win the trade. But if it hits my stop loss, this is the most I can lose. So the reason Forex is risky because you guys don't know what your potential loss could be. So let's look at this trade. So our potential loss can be, let's see, oops, that was about 80 pips, right? Let's see. So look, this was 80 pips. So I said, you know what, if I'm wrong, I'm willing to, let's say we did $1, let's say I did $5 per pip, and you did $1 per pip, right? So when you did that $1 per pip, that means that you were willing to risk $70 of your account to make $461. I was willing to risk, let me see, $5 times 80 pips. That was a big risk for me, but I was willing to risk $400 of my 1,000, which is a lot, to make $2,300. Now, I wouldn't personally do $5 a pip on a $1,000 account ever, but I just wanted you to get the understanding on the potential income you can make. As you know, it's the market. When we took the trade, just kind of zoom into it. We took the trade right here. It went down from here. It went down like 10 pips. So we were negative 10 pips at the time. And then it went to positive 460 pips and never turned around since. Well, at that point when we took the profit. So we literally, guys, profited a pretty much risk-free trade. So I'm going to show you how to figure out when the market's going to go. I'm going to go over and tell you why things move certain ways. So let me stop sharing my screen real quick so we can kind of go over how that goes. So I'm going to actually not share my screen, but I'm going to show you a different screen. So as you've seen these candlesticks, right? With these candlesticks, depending on what you choose, that's what the candlestick means. So like if we look at this right here, let's look at the daily. That means that each of these candlesticks represent a day. Now, if this is one candlestick which represents a day, just like on this chart right here, let's say this candlestick right here is one day. That means that if I want to know more about this candlestick, I need to zoom into what's going on to this trade. So now there's one daily. I mean, that it takes 1, 2, 3, 4, 5, 6 candles to represent one day. So if I want to see what's going on in this candlestick, let me just kind of highlight right here. I will have to go into a 4-hour candlestick. And as you can see, it zoomed in for me. Now let's say I want to see more of this, right? I can go into an hour. As you can see right here, we got 12 candlesticks. So the purpose of this is you don't want to, I'm going to explain what each of them means, but this is basically how you zoom into the market to figure out what's going on. So in an hour, in that one day candlestick, this was going on inside the market. So you're going to really see how relevant this is in a minute, because this is going to be really relevant when I teach y'all this strategy. But it's very important, guys, to understand you want to go from top to bottom. So I'm going to explain. The market's always trending up or always trending down, right? So sometimes it's going down, it's going up. When you're looking at higher time frames, I don't look at higher time frames to decide where my trade, or what trade I should take. I decide the overall direction of the market. So right now, if we're looking at this, if we draw a trend line, the market is trending down. So what are we looking for right now? We're looking for a trend. So it went down, then went up. It went down, then went up. And now it's going to go down again, and then it's going to go up. So now that we know that the overall trend is going down, what are we looking for, guys? Just let me know. Just open your video chat. Let me know. Are we looking for buys or sales? Just open your video mic up and say, look, are we looking for buys or sales based off of this, based off the
sales?
Huh?
Sales.
Exactly. So we're looking for sales overall. So the majority of what you're going to be buying, guys, now are sales. And I see a couple of people did in the chat box. Let's see what y'all had in the chat box. Let's see. Sales. Exactly. So we're looking for sales. But I want to show you a trade that I took in this market, which was a buy. And we're going to go over it in a minute because I'm going to show you some strategies. And it's going to be a really dope strategy. I've seen a lot of you guys, when I asked you how well you know Forex, you said 3 to a 4 or a 5 to a 7, which is great. So now we're looking for sales right now. So we're not going to trade this chart. This is a daily. We're going to zoom into this and find our best sales by marking charts up and everything. Now, I'm going to go over that in a minute. Now we know the overall direction of the market. And like I said, I'm not going to go over everything today, guys, because it's a lot. But I want to have you where you can come into this thing, watch this video, practice what you learn now. And then as you look at my other YouTube videos, and I keep coming out with new YouTube videos, you can apply those principles. Overall, I want to have it with my channel. It's showing you how to become a professional trader over time by having a lot of different videos. So today we're going to just focus on a lot of specific stuff. I'm not going to go into details of everything, but we're still going to dive into some really good information. So there's two things that make the market move, or how people trade. There are fundamental traders, and there are fundamental traders, and there are technical analysis traders. A fundamental trader is basically people who trade the news. So I have a question for you guys. I'm asking a really simple question. Euro versus USD. Remember, Euro means that the market's going up. That means the Euro is getting stronger against USD. When the market's going down, that means the USD is getting stronger against the Euro. If, let's say, Trump said something that said, oh, man, we had the most deaths in the USA than we ever had in the world. We're having all these deaths. Do you think the market's going to go up or down based off that bad news? Off this pair. Let me know. Just open the mic, so let me know.
Down.
It's going to go down? Nope.
It's got to go up.
Exactly. How come?
Yeah, I mean, you're trading Euro against USD, so if the president is in the United States, so of course,
Exactly.
Euro is going to go up.
Exactly. And if Euro's going up, that means it has to go up. It has to go up. So a lot of people say down. Nope, it goes up. See, that's where a lot of people mess up too. They think because it's down, that means bad news means down. No, bad news down for that particular pair. But which pair? So if USD is second and it's bad news, that means that the market is about to shoot up because USD is second. If the market shoots down, that means that USD is getting stronger. Remember, when the market goes down in the second pair's favor, it gets stronger. When the market goes up in the first pair's favor, that's getting stronger. So does that make sense? Let me know if that makes sense. As far as what we went over as far as fundamental. Now, yep, okay, cool. Now, let's go over technical analysis. Technical analysis is basically looking at market structure, looking at support and resist, trend lines, patterns. So I'm going to teach you guys very basic stuff as far as support and resist. I'm going to teach you guys how to use the Fibonacci, and I'm going to teach you guys how you can mark up charts. Now, let's kind of go over that. Let's go over support and resist. So we're going to just zoom into this really quickly. I'm going to zoom into this part. Let me hide that for now. So, guys, and open your mics up for this. Let me know. When I throw a tennis ball on the ground, what happens to the ball if it hits the ground? As soon as it hits the ground, what happens if it's a tennis ball? Huh? Let me know. Let me know.
Bounces off.
It bounces up, exactly. So in the market, guys, I'm teaching about support and resist. When the market meets one or more points, as you see that it hits this point right here, and it hit this point right here, and it hit the point right here too. And it hit the point right here also. When it has two or more points, it creates a support. So when you throw a tennis ball on the ground, what happens? It bounces up, hits the ground, bounces up again, hits the ground, bounces up again. Came back down, bounces up, hit this floor again. The reason this is a floor is because it had at least two or more points hit this multiple times. Does that make sense? Now, it's the opposite for a ceiling. What is a ceiling? A ceiling is when two or more points hit the opposite direction. So right here, look, 1, 2, 3, it's keeping over and over. So that's our ceiling. So remember, and the ball, if you throw a tennis ball, it goes back, bounce back and forth over and over and over and over, right? Now, this is called resist and this is called support. Now, resist can become support and support can become a resist. And I'm going to explain what that means. So let's say that you throw a ball, a tennis ball, and this ball must be pretty strong, right? And you throw it through the roof. I want y'all to imagine this because I want y'all to answer this for me. Imagine this. You throw a ball through the roof and it goes to your neighbors, your neighbors above you house. It bounces back down. It doesn't go back through the hole, but what it does is it bounces on your neighbor's floor. Once the tennis ball goes through your roof, bounces on their floor, which direction does the ball go? Let me know. Back up. Exactly. Because a tennis ball, when it hits the floor, it bounces up. So what that means is that in Forex, it's like basic gravity. When it breaks through a ceiling and bounces back down on top of that ceiling, it is no longer a ceiling for that ball. It's a what? Someone answer that for me. If it's no longer a ceiling, what is it now when it bounces on top? Floor. A floor, exactly. And so what happens when the ball? So now I want to zoom in more into this. I see my floor and ceiling. I'm waiting for it to break and retest. So what is a break and retest? That means it broke through here and it came back down and retested. But I'm on the hour chart right now. So I want to zoom in a little bit more so I can see more details on what's going on with this tennis ball. So let's go to the 15-minute chart. Let's go back to it. This is where we were, right? So the tennis ball was going back and forth, up and down, up and down, up and down. And it finally broke out. As you can see, and you would have missed that move. So you can see it broke out of here. It started creating a new support and resist right here. So we can just bring stuff. This is a zone. Like I don't really count this as support and resist. So what we do is this. I count zones. So this is a zone. It bounced on the zone, right? So when it broke through the ceiling, it started bouncing on the new floor. So what happens? It goes up. So you could have took a trade based off it going up because it bounced on that ceiling. Now, that floor, which is the old ceiling. So that's a simple way. I don't know about confusing anyone. That's how support and resist kind of works as far as zone areas. So can you trade just support and resist? I don't recommend it. You want to have multiple confirmations. And I'm going to show you what that means also. So, but does everyone understand what support and resist is now? And how support and resist is created and how it can break and retest and it can go, it can help determine the direction of the market. Let me know in the chat box, or let me know, you can bring your voice up, it doesn't matter. Just let me know if y'all if that makes sense before we move on to the next part. Yes. Okay, wait, I'm not sure that say yes from the old chat or not. Okay, cool. So, yes, perfect. Now that we went over that, I want to talk one more thing. I want to teach you one more thing before we move on to the next part. I want to teach you something called a trend. So let's go over here, let's go to 4 hour. So remember, I taught you the trending market. Let's remove all this stuff. Remove drawings. Then the next thing we're looking for is a trend. Now, if you look at this, guys, just like we did support and resist, where it's multiple points going this way, doing like kind of diagonal shows you the trend. So look, if you go from here and draw the line from right here, it was here, came up, came down, boom, came up, it's gonna come down here, boom. It's gonna keep doing it over and over and over, right? So this is a trend. And this kind of tells you exactly where the market is going up that way. So this is a trend. This also uses the same rules as support and resist. When it meets multiple points, it creates a it creates a trend line. So let's everything that we learned between support and resist and trend lines, let's take a trade. I'm gonna show you a trade that I took. Now, if y'all have any questions as we go into this, let me know. So I have a little worksheet that we're gonna go over. So this is gonna be like the worksheet we're gonna do. So the first thing we're gonna do, guys, is we're gonna draw a trend line. And that's, let me see, one sec. Let me just delete everything so we can start from scratch. I'm gonna show you the trade setup I had. Replay. We'll do it about right there. Okay, cool. So I took a trend line. So what does it say the first thing to do? It says draw a trend line to determine the market direction. So let's draw a trend line to determine the market direction. We want to look at the bottom of the market, the low part of the market right now, and then draw a trend line based off that. Right now, at this point in time, this would have been the lowest part of the market. So we would draw a trend line so we see that it's going up. First step. Second step, find and mark the lowest point. This is the lowest point. So I'm just gonna kind of highlight a little bit, I'll just do it like that. Now, when section A is complete, we found section A. In the lowest part of the trend, we got 2 candlesticks. We already got that. Next part is find the very first high after the first low. So what is the very first high after the first low? If you look, it went up and it went down. Once it went up and it went down, that became our high right here. How's a high determined? By 2 or more candlesticks. Are y'all following me so far? So this became the high because it retraced back here. Does that make sense so far? Let me know. Just open your mic. Let me know if that makes sense so far. Do y'all see how we create the high and the low and the high? How we found the high and the low?
Yes.
Okay, perfect. Now let's look at the next step. We're doing it step by step. So look, we're gonna call this point A, and we're gonna call this point B. And now we're looking for C. What is C? C determines the pullback. It's the deepest point between A and B without it taking out A. So what does that mean? Like, if you look at this diagram, this was B, this was A, this was B. So we have to find a pullback between A and B. That means that it couldn't be high, it can't be higher than B, and it can't be lower than A. It has to be in between. So let's look at this. I'm just gonna bring my little diagram up. This is A, this is B. Do y'all agree that this is between A and B? So yes, we do that C. We'll talk about D in a minute. So it created the A, it created the B, it created the C. Now I want to kind of talk about what that means. When you see a C right here, that means that it's called a U-turn. That means that the market is about to turn around. And so how do you know? There are things called multiple confirmations that kind of tells you why this is a good setup. So for one, is it created the A, B, C pattern so far. 2, there's another thing you look out for is you look out for reversal candlesticks. So you look out for engulfing candlesticks, look out for pin tops. I'm not gonna go into details on what those are, but I do have an indicator that tells me what engulfing candles are. So if we turn this on and highlight it, if you notice, this highlighted blue. So the software or this tool told me automatically this was an engulfing candle. So that's the second confirmation. So confirmation number 1, it created A, B, and C. Confirmation number 2, it created an engulfing candle. Confirmation number 4 or 3 or 4 is it hit my trend line. So what does that tell me? First of all, before we do that, now that we have an ABC pattern, we're going to use a tool called the Fibonacci. So I'm going to bring up a Fibonacci. And like I said, I'm going to have more detailed videos on how to set everything up. I'm just giving you the basics of everything. When you bring your Fibonacci up, you draw the Fibonacci from B all the way to A. Very simple. Now, this is the next confirmation. It hit our trend line. It's an engulfing candlestick. It created an ABC pattern. If on the Fibonacci, if it hits the 50 or the 60, it's a very good indication that the market's about to go up. Let's zoom in. We're on the 4 hour. Let's just zoom in a little bit. Well, that's not zoom in. You can just look at it from here. Did it hit the 50 or the 60? Yes or no? I mean, if you don't know what the numbers are, it's right here. So this is the 50. This is the 60. This is the 25. This is 75. Did it come back? Did the C fall on the 50 or the 65 or the 68? I mean, yes or no?
Yes.
Cool. So that's another confirmation. So the more confirmations you have, guys, the stronger the trade that you believe is going to go in your direction is. So the problem is, guys, that most of us find like one confirmation and take the trade. No, I need multiple confirmations. So far, it fell on the trend line. It fell on the 50. It was an engulfing candlestick. An engulfing candlestick indicates a reversal. It hit the ABC pattern. Now let's go back to the diagram. What does it tell us in the diagram? It says that determine the extension based off the D. So look, if we look at it, A, B, C, and if we zoom in, let me zoom in this is D. Meaning that since A, B, and C was created, we know it can potentially go up all the way past B, take out B, and hit D. So let's look at this trade. Now the cool thing about this trade is, if we're looking at this trade, guys, and we went off of this diagram, and it's A, remember, like just in this diagram right here, A, B, C. So it went up, it went down, it hit the fib level. That means that it went up. That indicates that the market is going to go up, and it created an engulfing candlestick. So it hit all the confirmations. What direction? If we have the same type of style here, it went A, B, C. We have an engulfing candlestick. It hit the trend line. It hit the 50 at the top. What direction do we believe the market's going to go?
It's going up.
There we go. Let's see what happens. So we got confirmations. We take our trade right here. This is where we take our trade. We enter our trade. We can put our stop loss about, we'll put our stop loss about right here somewhere. We'll put it right below this wick of this candle. So I'm going to call that stop loss right there. Now, where is you going to take your profit at? Now, this is where it depends on what kind of trade you want to be. So we know that it could potentially beat B out. So it depends what kind of trade you want to be. Maybe you're a person you want to scalp 30 pips and be out. Then there's another type. So, I want to aim for 150 pips before I'm out. Some people will keep taking trades over and over and over. Or some people, what they do is they'll do both. They'll take a trade. Let's say we took a trade for Euro USD for $1 a pip, and we took the trade twice. And we went for 30 pips and closed the trade out. And then we held the second trade and we moved our stop loss to break even. So once the first trade hits 30 pips, we don't close the second trade. We move our stop loss to break even. And then we close out the second trade at a higher take profit. And if it doesn't hit our higher take profit, the worst that happens is we break even. So let's take the trade. I'm going to just mark these levels up. So what I did when I took this trade, guys, is I said, okay, it's going to go up at least right here to 75. And it can probably potentially get up to like here. So this is what I thought, like here to here and one more to about right here. So these are the 3 take profits. Let me go and change that on how it looks. Take profit 1. That's take profit 2. And the reason I did the take profits there is because that's what all the fib levels hit. So the fib levels are so strong, guys, that all I do is go take profit and stop loss on the fib levels. So we're going to do another take profit. Boom. Let's get rid of this Fibonacci because we got all this other stuff. So now we got this. We got the A, B, C, and D. Remember, D is up here somewhere. A, B, C, D. We got multiple confirmations. We can even, so let's go ahead and play this out. Took the trade. It's testing our trend line. Create another engulfing. Woo! Then look, you know what's crazy? Let's pause that. You notice it came up and retested back on the fib. This is something that we pre-did before this trade even happened. That's how strong the fib levels are. We got take profit 1 hit, We got take profit 2 hit, and there's a good chance take profit 3 about to come next. We came back right up to B. Now, can it turn around? Yes. But that's how many pips did we caught so far between these 2 points. We took the trade right here, right? That was our entry. We caught about 80 pips right there off that trade alone. All we did was just do some simple. All we did is go through a worksheet and just do the checklist off on the worksheet. Let me hit the play button. Let me see where. I think that's the end of that trade. Let me check. Okay. See how it's just testing on that thing, man? It's amazing, right? Right on that fib level. So if you zoom in, we can see even more of the trade. Let's delete all these diagrams and stuff. Let me know, guys, in the chat box if this trade setup made total sense and you learned something new as far as how to draw Fibonacci's and how to go to take profits and how to know the direction of the trade. Now, we're going to highlight this trade, and you can let me know. You can open your mics up, or you can just say in the chat box. It doesn't really matter. So, oops, not that. That's too far. We took the trade around this point. So let's zoom in and see what happened. That was on the 4 hour. Let's look at the 1 hour. Guys, we caught so many trades. And the cool thing is, guys, this works on every time frame. So you could have did this. You could probably found another ABC pattern. So let's look at another one, guys. Look at GBP, JPY. I need someone to open the mic up. We're going to do this together. We're gonna look at the old part of the market, and we're gonna do this together and everything, and we're gonna figure out what's going on, and we're gonna draw this whole thing up together. Because that's what we do in this thing, guys. So, oops. That's too far. Yes. So who wants to volunteer to do this next one? Anybody? Anyone?
I'm with it.
Huh?
I'm with it.
Okay, cool. Let's I'm gonna bring up a 4 hours. You know what I'm saying?
Down.
Okay, not yet. I'm going to just go ahead and I just want to draw it up. You know, we already know where it's going and everything, but I just wanted to draw this up, right? So let's just say that it was like, let's say we finally created everything, right? Now let's look at it. Remember, it's highlighted. Everything that the engulfing counts are highlighted everything. So I wonder, can you click and so okay, tell me what's the first step? What are we doing first to identify this trade?
Draw your trend line.
All right, let's do it. All right, what's next?
Find point A, point B.
Yep. All right. Just tell me where to stop. I'm starting A because A is pretty obvious. So this is A. Tell me when to stop for B.
Right there.
All right. Tell me when to stop for C.
There.
All right. Cool. And D can be wherever because it haven't stopped happening. That's what we're aiming for. I take profit. Okay. Tell me how many pips that you want to make on this chart, this trade. Just give me a number.
50.
Okay. Cool. So we're gonna aim for 50 pips on this trade. We doing buy or sell?
Buy.
Perfect. Let's do Fibonacci. When you do Fibonacci, you go from B to A. That's how we know where the market's going. So technically, if you caught this trade right here, when you first seen it, you would have caught about, this is already about 200 pips just going from here to here. So you want to aim for 50 pips. All right, cool. Let's play this trade out. I'm gonna get rid of the fibs, but I'm gonna draw the horizontal line so we know what all the levels are. This is where let's say that's where your entry was. And then we're gonna just go to, all right, cool. So let's get rid of this fib. Let's go ahead and hit play. We're aiming for 50 pips. Let's see where 50 pips is. This is where you took the trade. 50 pips is about right here. That's your take profit.
Definitely killed that.
Right. Now you see how easy take profit 50 pips is when you actually know what you're doing. Okay, let's see. Cool. You hit it, boom. That happened in like 4 hours. Not even happened an hour, probably happened in like 1 hour or something like that. You hit 50 pips in probably like 30 minutes or an hour. Now let's just see where the trade goes though. Remember, we marked up everything already. Out the fibs. Oh, it came right back on that fib. Then it came on that fib. Boom. Let's say you held the trade. If you want the 50 pips, you would have been out the trade already. But let's just see where it went if you held the trade this whole time. It never hit your stop loss yet because it never went past your entry. It was scaring you for a little bit though. Oh wait, it already hit all your take profits. I'm tripping. There we go. It hit take profit 1. No, this is the entry. It take profit 1 and 2. Is there another one? No, that's only 2 we did. How many pips was that if you held the trade? This was 300 pips. Guys, come on now.
Good money, good money.
So, here's the checklist right here, right? Watch this, look. What we did on this checklist is, and there's more to it. I ain't go over everything. Like I said, on my channel, I'm going to go over everything. So y'all definitely want to subscribe to my new channel. I'll show y'all how to get there in a minute. But if you look at it, it's are the candles A and B, you got that? Is it above the trend line? Yes. It just tells you everything. If it's bullish or on the formation of 618, 78 retracement, yeah, it did. And then we got the RSI and all that other stuff. Did it have the engulfing candle? Yeah. So we had yes on all this stuff and we killed it. Only thing we didn't look at was the RSI. So multiple confirmations, and we got like where 4%, 20%. Like it doesn't have to hit every confirmation, but the most important stuff is the 40, 20, and 10. The 5% is like the extra like, okay, now, oh man, this is like a crazy setup. So when you hear people say, man, I found a crazy setup, you know exactly what they're talking about. So imagine you and your friends are looking at different pairs and you see a B, and C setup and the D hasn't happened yet. You see the engulfing candle. You see it hitting the trend line. You see it hit that 50, 70, or 60 on the fib. And you know that the overall trend of the market is going in the same direction of what we're talking about from looking at the higher time frame. Now man, I'm about to go for 500 to 1,000 pips. You ain't going for those 5 pips anymore because you know where the market's going. See, when you go for 10 pips, you don't know where the market's going, so you just hoping, you praying and spraying. Praying and trading. That's what we call it. So, guys, like, this can be really game changing. Like I said, on my channel, we're going to be going over a lot of different stuff. Definitely, if y'all want to, y'all can check out my new Instagram I'm building. It's called Instagram.com/ you can follow it. It's on FX Social, FX Social Profits. And I'm going to be posting some dope stuff. I'm going to be posting when I do webinars on here. And if you click here, via my Instagram, you can see all the different stuff. You can get to my YouTube channel from here. You can go to my official website. You can join my signals. I have 7-day free trials on my signals before you have to pay. I have a free signal group. You hit that YouTube channel. Like I said, this is a brand new channel, so you guys are the first ones to check it out. If you're watching this via YouTube, respect the growth. So I haven't even uploaded the video yet. So I don't know how many subscribers. I think I got 1 or 2. So I have another YouTube channel that has over 50,000 subscribers, but I told myself I want a YouTube channel dedicated to educating people and getting value. Let me know in the chat box. Let me know in your mics if you have any questions or if you got any value off of what we went over today.
Lots of value, man. Lots of value. Thank you.
Awesome. Thank you.
Will we get a copy of the checklist?
Great question. I will be giving people a copy of the checklist. I will email everybody. I want everybody to just message me after this on my Instagram page, not my CEOBranden page, but my FX Social Profits page, and say, hey, Brandon, I would love the information on how you get that diagram, and I will tell you exactly how to get there. So, cool. Any other questions? Like I said, I'm having a lot of different these. I might be doing this like every Sunday. It might be different topics. It might be a different topic on Forex. Because I don't want to go over the same topic I was. value, B. Much appreciated. I'm glad I made it to the webinar. I'm glad that you made it too, bro. Appreciate you.
Yeah, I got a quick question. So they say, right, that people do about 20%, but I've seen myself do more than 20%. But is it like reaching for the stars to think that I'm able to do more than that?
20% of your account?
Yeah, 20% of your account
So
daily.
people, I only time I aim for 10 to 20% is if I have a bot trading for me. But when I'm trading myself, I might aim for 40, 50% a week, 200% a week. Because you never, like, look, when we started trading stuff, it was 500 pips. And I forgot to teach this part. I'm glad you reminded me. This is the last part I'm gonna teach you guys. This is the super sauce. So when we're looking at a trade, right? And you think, let's look at this trade. Let's bring up the tool over here. Let's look at this trade. And you say, you know what? I'm willing. Let's say that you're really very sure about this trade. And if you're wrong, it's very low risk. It's a very good setup. You don't think it's gonna go lower than here. So you're putting your risk at about right here. This is your stop loss. And you're aiming for your take profit to be about right. We'll say about right here. That's your take profit. Now, when I have a risk so small and a take profit so high, actually, we're gonna go all the way up here. Forget it. Let's go. Give me an account balance real quick. Anybody? And I'm gonna tell you what I would do.
Wow.
Huh?
1,000.
1,000? Okay, cool. So let me see how many pips is this? This is about 90 pips loss. So let's say that I said, you know what? It depends on how much I want to do my money. I can do 50 cents per pip. I can do $1 per pip. I can do $5 per pip. So let's just do the math. You guys ask, how much am I willing to lose? So we got.
I do like 3% risk per trade.
Exactly.
I was working out like that.
Exactly. So if you want to only lose $30 in this trade, you got to do a very low lot size. So that's another point: is the higher your account is, the bigger your account, the better. So with $1,000 account, you want to say, okay, if I only want to lose $30, how much am I going to do per pip? Or if you want to be an aggressive trader, it's okay. Maybe I want to risk, because I'm really sure about this trade. I want to risk 9% of my account for this trade. But if I'm wrong, I'm not trading the rest of the day, if that makes sense. So if we did 9% or 10% of the trade, let's do it like that. That's $100 you're willing to risk. But if you're wrong, you're like, you know what, I'm done for the day. But if I'm right, I'm gaining 600 pips. So you gotta ask yourself, dang, 600 pips is really good. So I can risk $100 to make $600. And the good thing about these trades is really more than $600, because what you're gonna do, guys, let's sauce it up even more. We about to zoom into this part. Let's delete this real quick. We're gonna highlight this entire area. I'm about to really show y'all some sauce. I almost forgot to show you. I'm glad you asked me that question. So we're looking at this area, right? Remember, we zoom in. This is the 4 hour. You always still want to zoom in when you're looking at stuff. You can take multiple entries, guys, inside of this. So look, when we took the trade, we took the trade right here. It's a C, came up. And then it came up all the way. Just kept coming up, 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 up. Came back down. So now, right here in this area, I can delete this now because we already know where we are. In this area, I'm going to start looking at my new A. This is my OA. No, this is my C. So that's what I meant to say. Look, so at this C point is now my A. So when you see it go up and retrace, now you're looking for A, B, and C pattern again for a re-entry. So you can redo it again and come in while you have an open trade. So let's look. This is A. This is the bottom of it. This used to be C. It came all the way up. We're looking for the next high. It came up. This is the next high, right? B. Came down. C. And this, I didn't even look at this guy. I'm just going at the flow. If you had just recognized that, let's look at it. We're gonna do D right here, obviously. So look, do we see a trend? Yes. Do we see an ABC pattern? Yes. Do we see an engulfing candlestick? Yes. Now, do we see support and resist? Yes, this is support. Is this on a 50, 70, or 60? Let's look. Go from B to A. What did it fall on? It fell right on the 68. 4 confirmations, pretty good. 4 or 5 confirmations. Are we doing a buy or sell?
Straight buy.
Straight buy. And you already up before you took this trade. When you originally took this trade from A, which was your OC, you were already up 300 pips. You just coming back in again for some more. Come back up, boom. Hit your stuff. You out the trade. You done for the day. You almost hit 1,000 pips on one trade. And max yourself on 3 or 4 different trades, and you're just holding them all. And sometimes you're taking multiple entries while you're doing so. This is an hour. Imagine we just went to the 15 and looked for the same setup. That means you can do more setups. Now remember this. I'm gonna teach you this too. The lower the time frame, the less chance of it doing that direction you want to do. But you get multiple entries on the lower time frame. So like, look, let's delete all this stuff real quick. Let's find some A, B, and C patterns inside of this area. So just look at it. Like here go one right here. Now y'all can see it almost as clear as day, I bet. Where we going? Boom. Fibonacci. Did it hit the 618? Whew. Man, I just gave y'all sauce. Multiple confirmations. Is it hitting the trend? Did it hit the trend on that C? Oh, yeah. Sure. And if we don't know for sure, let's go into the 5 minutes. Ain't nothing to go zoom in. Oh, yeah, look at that. Another engulfing candlestick right in 5 minutes. Cool. Anyone have any other questions? So I think that, so the more you can do 20, 50%, 100%, 200%. But I always tell people, try to the reason people lose also is because they over trade. So when you try to do 40%, 100%, 200% of your account, do it based off of longer position trades. If you're in and out of the market, aim for 5 or 10% a day and just be out. Don't try to keep trading over and over. The only time I tell people to go for 200% of their account, 30% of their account is because you're holding long position trades. So there's no real risk at that point because the worst case scenario, you're going to close on profits. But when you keep trading over and over and you got to take 20, 40 to 100 trades to get 200% of your account, that means that you can potentially just lose a bad trade because you kept trading over and over. Does that make sense?
Yeah.
And then I have a question.
Sure.
In a limit order, how do you enter for the different take profits? 1, 2, 3.
Well, if it's a limit order, it's the same thing. So all you do is draw the Fibonacci, and so you say, you know what? If it hits this point, and your limit is, it's going to take the trade once it hits that part of the market. You already have your take profit. So you can do 2 or 3 trades, you can do 1 trade, whatever. And so this is my take profit on this part of the fib level. This is my take profit on this part of the fib level, and so on. Or you might just have one. So I want 30 pips. So you might want to hit it, take the trade, go for 30 pips, and you're out. And you know what 30 pips are. So, or you can go for the next. Obviously, you go for the next level. So if it hits a 618, make your take profit 7-8.
If you want to do it like that, where you do 1, 2, and 3 individually, are you entering 3 different trades then at that time?
Yes. So some people do 3 different trades. Some people, what they do is they just do the highest take profit and then just watch the trade and then move their stop loss as it's going to each entry.
Okay. Now, the other question I have too is that I noticed that when the signal comes, by the time the signal comes, at least when I get them, from whether at market, it's way past several pips for me, maybe 20, 30, 40 pips. So how do you deal with that?
I wouldn't take the trade if you missed it. I always tell people don't have to chase the trade. And what my signal group is, what I teach people to do, and I'm going to have a separate video on my signals for this, so I don't want to go too many details on it. But how I tell people how I'm going to do my video for the signals, I'm going to have a whole separate video for this. is a lot of people thought since I called 3 trades, I should take all 3 trades. No. I called 3 different take profits. So the first trade would be take profit 1. The second trade would be take profit 2. The third trade. So if I call Euro USD and it climbed about 3 times, that's take profit 1, 2, and 3. Take profit 1 will be a quick trade. Take profit 2 will be like medium. Take profit 3 might last a couple of days. So depending on what type of trader you want to be, you can choose which option that you want. And so I'm going to do a training on all of that too. But you know what I've been doing for my signal group is at first I had some friends. You know, we were all good traders, and I put them all in the group. But the problem is I couldn't figure out who sent out good trades and who sent out bad trades. So I had to revamp everything, and I kicked everyone out the group. I stopped sending a whole bunch of trades out for like a good week and a half, or 2 weeks. And what I did is I made a separate group, and to automatically test the stats of every trader. So every time they lost and won, it would track it. So then now what I do to improve my signal group is before I put a new trader in there, I qualify them. If they have an 80% win rate after like 2 weeks, I put them in the main group. So now my goal for my signal group now is instead of I have a qualification group. Once they meet the 80% qualification, I put them in the group. So my dream goal with my signal group is I want to have it where it's a 7-day free trial. After the 7-day free trial, it's about $25 a month, and I have the best traders in there. Now, anyone that's obviously in there that came in before $25, you're going to be in there forever for whatever price you came in. But the goal is to be $25 a month, 7-day free trial, and I have the best traders, hands down, in there. So that's the main goal for that signal group, and I think it's going to be really amazing when I'm teaching you guys on my channel how to trade, but for like $15 to $25 a month, depending on what you came in at, you're also going to get some amazing signals, and you're going to be able to mark the charts up. So let's say you asked me if you missed a trade. All you got to do is now mark the chart up as you're learning how to trade and say, like, I did miss that 30-pip move, but do I see a retracement? Do I see a new A, B, and C coming in where I can probably potentially enter for the trade because it hasn't hit TP 1, 2, or 3 yet, if that makes sense. So the best answer to your question is you become more educated on Forex. Even if you miss a move, you know the overall direction based off the trade idea, so you can look for a potential 30, 40 pips again based off a retrace.
Okay, thank you.
You're welcome. Any other questions before I let you guys go? Well, I'm going to let you guys go. I don't want to hold you guys up. I'm going to put this channel on my YouTube. Like I said, go follow my Instagram, Forex, FX Social Profits. You can subscribe to my YouTube channel. If you can do me a favor, guys, when I upload this video, please, leave a comment. If you're watching this thing via YouTube, leave a comment. Tell me what you like best about the video. People who are watching this live right now, leave a comment. Let people know how much you like the live, and I'll do more lives as we do. And I want to just keep teaching you guys. So I didn't want to. I feel like I was able to educate the new person and teach people who already knew how to trade a little bit and some value without making it very complicated. I'm a very simple person. I keep it simple. That's why I use the tennis balls. A lot of people, man, that's stupid, man. It's not a terminology. I don't care about terminology. I don't care about none of that stuff. The only thing that matters is you know how to trade. And you can't. The problem, I think, when people start learning to trade, some people overcomplicate things about using certain terminology or over teaching so many different things at one time, and the person can't learn because their mind is over. So I think that we learned to love today, where you can feel comfortable looking for the A, B, and C, drawing your Fibonacci. And like I said, I'm going to be having sessions where we're going to be going over specific things with inside that via my YouTube, and we're going to be having live education. So it was good meeting you guys. Leave a comment below. If you're watching this YouTube channel, I want you to like, subscribe, share it with a friend, comment what you like best about the video. If you have any questions about anything we went over, let me know in the comment section of YouTube, and turn the notifications on, so anytime I come out with a new video, you're notified. Like I said, I'm only going to be giving value out, and it's not going to be just about Forex. It's going to be about marketing, website building, brand building, blogging, CPA marketing. So I want to give the most value. My goal is to get 100,000 subscribers, and I want to change 100,000 people live with free value. So thank you guys for your time, and y'all have a blessed night.